Hey, it's Sasha Evdokov. Thanks for joining me. Last week, I had a couple people ask me about when should I go big on the market or when should I sit out and wait patiently for things to calm down. Well, I think this is an important concept, and Jesse Livermore talks about this being as a big deal, is that he made more money sitting than he did actually trading. Now again, I go back to my concept or definition of my definition of trading, and I think of it as the act of buying and selling. Now, with Jesse Livermore, the way he phrased it, or the way that I believe he phrased it from when I read it, is that he made more money sitting than he actually did trading, and he meant it in two different ways. The first way that I believe is that when you're actually waiting patiently for those appropriate setups, the right setups, in order for that stock to get to a certain level, in order for that chart to set up, in order for people to change their mind about the company, or maybe the company bringing a new product to the forefront. The second version, or the second idea or concept of making more while sitting, is that if you're actually in the trade, if you're already in the trade and you have a position, then you'd make a lot more money sitting on your hands and letting that stock ride as high as it can go until it stops moving. So you obviously don't know how high a stock can go, and we can get some predicted or projected moves based on some technical analysis, previous data, and how much volume and how much a positive sentiment this stock has, but you really don't know. Some things can go much higher or much lower than what we expect. So if you think of these two concepts of, hey, we can make much more money if we're sitting out, so then wouldn't it make sense that we should be sitting out more often? And I fully agree. I think that most people tend to overtrade, especially at the beginning, and it's because you get this rush. You get this high of, hey, I need to make a trade. I'm going to make some cash, or I'm going to make some money. But the thing is you need to be patient and wait for these right setups. Sometimes if you're waiting for these right setups, you only need 2 or 3 stocks to make your year. Maybe 4 or 5 different trades will make your year on a specific stock or company. So the thing is that what you want to do is wait for the right setups. And then when you're in the trade, hold those setups for as long as possible. But how do you know when to sit out of the trade or when to go aggressively? Well, the thing is when the market's going up on air, when the market is just moving up and higher, but there's no juice behind it, people are looking at it and saying, I don't know why this market's going up, chances are it will retrace. The market typically takes multiple months, 2, 3, 4 months to make its highs and then roll back over. It takes a period of digestion time. So you need that digestion period for people to battle it out, just like in the olden times when we had battles over land. It takes multiple months, sometimes multiple years, to see when things pan out. Now for those market tops, it takes those multiple months, and then you may see the consequence of who won, whether it's the bulls or the bears. But you're waiting for this consolidation period, you're waiting for this digestion period, and if it's going up on air, if it's going up and there's no fuel behind it, what is going to be supporting the market? What is supporting the market going higher? So I always want you to take that into context as you're watching stocks move higher or you're watching stocks move lower, because you might be waiting for purchasing it at a lower price. Is what's taking this market higher? So always be thinking about these things in the back burner, in the back of your mind. And when you see a lot of fuel, a lot of fantastic earnings, when you see great new companies coming into the stock market, maybe you're seeing new product inventions, or a huge sentiment in terms of people going crazy over certain products like Apple back in the day, that's when things can take and move the markets higher. But if you don't see that, if you don't see people on a day-to-day basis looking out, kids buying all these new toys, or parents buying new toys for their kids, then you need to be aware of, hey, what's really driving these prices higher? Because typically the stock market leads about 6 months of the economy. So understand that it's usually ahead of where people are. But if people are still hesitant to purchase homes, if your friends are hesitant in terms of spending money, then you really need to be wondering what is going to take the market higher. And this goes in today's world or in the future, no matter when you're watching this video. So I hope this was helpful. Remember that you want to really sit out of the market if the market is going up and there's no support, there's no foundation, there's no fuel. But if there's backing, if there's a lot of people excited, then typically you want to get into that as early as possible. Otherwise, by the time the general public gets involved and by the time the general public, regular people start thinking about investing in the market, sometimes it may be too late. So those are my few tips in terms of when to sit out and when to go aggressively. I hope you find them useful. Thanks for joining me, and if you're interested to see my rapid recaps where we go and look at the charts, the actual physical charts in today's current market condition, and this is absolutely free, just go ahead, sign up to my rapid recap newsletter right here, click this link, go to the website, enter your name and email address, and you'll get those weekly. And if you want to condense your trading time, if you want to speed up your education and just take it from learning on YouTube to doing it quick in a direct path, then check out some of my courses at tradersfly.com. Thanks for watching, and remember to do what you love, contribute to others, and most importantly, live life abundantly. I'll see you next time.